What's going on, everyone? So let's talk about purchasing another stock today. So before I get into looking at the stock, why am I looking at dividend stocks? I want to build up my passive income. So I have a criteria for my dividend paying stocks. First thing, it has to be a dividend paying stock. It doesn't make sense to have it if it doesn't pay dividend. Two, it has to be a good growth dividend stock because I am trying to also capitalize on the growth aspect. Three, it has to be financially stable. So these are companies I want to purchase and hold it for a long term. So I'm looking at these to add to my portfolio so that I can have a passive income from a dividend paying stocks. So the company I'm looking at is Prudent Financial Inc. I don't really know what Prudent is. So it looks like it's a retirement or financial advising company. And looking at them, it looks like they do planning for retirement, protect family, grow with my money, and manage my expenses. So it looks like it's an all-in-all financial company. Looks like it has pretty good news. And let's look at the tools and resources, investment calculator. So it looks like it's a retirement slash financial institute. So looks like it does sell annuities, retirement, life insurance, investment, financial advisor, tool education. Yes, it looks like it is a financial company. So let's look at this. So we have a 1 year. It looks like it grew 3.22% in 1 year, which is not bad. But in the 3 year mark, it went to 6.83 in a negative. And 5 year mark, it's in the 6.72% in a negative. So right there, it does not. So the interesting part about this, it looks like it's on the drop. It might be recovering. So if it might be recovering, it might be a good time to purchase it because it might hit the good growth. Just because the chart indicating that it's in a negative last 35 years doesn't indicate what it's going to do in the future. So it does pay dividend yield of 4.11% or $5.20. So it does meet my requirement of it paying dividend. Now the good growth stock, we have to analyze it and see why it is dropping. So the finance, let's get into the finance of this. I don't want to go to nitty gritty, but it looks like in 2022 it lost 23.86% to 2023 to negative 4.84. So it looks like it's losing market share, which makes sense why it's dropping in the pricing. So the operation income went up. So it costs more to operate. Pre-tax income, it went up. Tax provision, it went up. So let's look at the margins. Well, the net profit is 4.89%, and year before it's negative 3.05%. So by looking at this, it doesn't meet my criteria of 3 being very positive in their income because they have, looks like 4 years ago they're in the negative, and then they're in the positive by 12% the following year, then back in the negative. So this following year, if it repeats this, it's gonna be in a negative. So it doesn't meet my third criteria, being financially stable, for me to want to purchase it. Because you have to remember, this is a dividend paying stock that you're gonna own a piece of the company. It's not a random number that gives you just a passive income. These are companies you are purchasing for your investment portfolio. So let's go into the insider trading. So insider trading on this company, there's no data. which is interesting. So, Prudent Financial Inc. Any good news about them, bad news? I don't see it. They are the smaller of the companies for financial institute compared to their peers, and the earning per share is going up per quarter. So, looking at this stock and what it does, based on this chart right here, it doesn't look like they're recovering anytime soon. It looks like it'll be a slow growth of recovery, and it's not going to be the best growth rate. They do pay a pretty high dividend yield of 4.1, 4.11, but the issue with it is if they're paying from the net profit, that 4.11 is going to bring it down farther. And it might not be able to continuously pay dividend. And course to AI, it's the performance is good, the earning is good, but the health of the company is a 1, and the growth is a 4, and the valuation is a 2. So if the health and evaluation is a 2 and a 1, 6, 6, 4, 6, it looks like it's about a 3 out of 6 stock. And it looks like it has insufficient data on some of it, which is concerning me because not all this data is available. Just because they pay a high dividend yield does not mean you should purchase this stock. So, in my perspective, should you purchase this stock and when should you purchase it? Now, for my portfolio, I will not add this stock just because it doesn't meet all my criteria. Now, too, doesn't mean it's a bad stock. No. Does this stock have some hope in it for good growth? Yes, it looks like it can have a good growth to this stock. And if you're looking for just a high yielding dividend that pretty much will stay even, I think this stock is good for the high yield. Now, you have to know that there's no growth in it. It'll pay a good dividend. It just doesn't look like it'll be a good growth year over year. And that's because more and more people are probably figuring out that annuities and other investment avenues aren't that great compared to investing it on your own. Now, I don't see this stock be able to, best way to put it, make a good growth. But if you're just looking for a high dividend to add to your stock portfolio, this is a good one because it pays a high dividend and it looks like it stays pretty much even and looks like it's starting to recover, so you will have a little bit growth to it. I'm looking for more of a growth of a 7%, 6% per year over year, and it looks like the growth of this stock will be about 3%. So if you're looking for a stock that will grow about 3 or 1 to 3, 4% with a high dividend, it's a really good stock to add to your portfolio. It doesn't swing either way dramatically, so you don't have to worry about the fluctuation. Now, remember, I said I will not invest in this stock. It doesn't mean it's a bad stock. So, will this company go somewhere in the next 5 to 10 years? Maybe it will grow 7% in the next 5 years, but I don't see it growing 20, 30% because it looks like they use all their money to pay out their dividends. And we can check what is their dividend history. Let's check the dividend history on this. Dun, 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 dun. So it looks like they do pay an increase of dividend. They do have a few years that they drop, but it looks like they pay all their money into that dividend, and they do have a pretty long history of it. So is it worth purchasing it? if you're looking for a long-term dividend, yes, you should purchase this stock because it does have a good history of paying dividend. You just will not have the growth like I am looking for. So please like and subscribe to my video. And my recommendation for this stock, if you're looking for a good dividend paying stock, this is a good stock. It just doesn't hit the growth of that I need to for this added to my portfolio.